All right, Happy New Year, everybody. Let's take a look at the market. The market kind of got a little bit of a rough start beginning of the year, but it was able to finish the week of the first two trading sessions of the new year in the green. But as you can see, week to date, only the Russell 2000 was positive, and the New York Stock Exchange Composite was positive by 0.08%. All the other indexes actually finished the week negative. But if we look at the first 2 days of the year, so that's where we see the column here on the month to date and year to date that represent the first couple sessions of the new year, and we actually have all the indexes finish in the green. So that is a positive. So you're looking at this weekly candle, this monthly candle of the S&P 500, we see this is indeed a positive candle. And here looking on this weekly chart of the S&P 500, we see a little bit of a hammer type of candle here, although on the week we did see it is negative because the color is red, so it kind of indicate that it is closing lower than the prior candles close. So we are seeing a negative week as depicted here for the S&P 500. For the week, it actually lost almost 0.5%. And here on this daily chart here, we're looking at the S&P 500. You see that I have a trend line here. It seems to be holding this trend line, and right now it is still making a lower high. So we need to see in the coming weeks to see will this high get taken out to put in a higher high. Otherwise, if it's continue to come down, we basically are looking for a lower low and possibly come down and test the low here somewhere around this 5,700 area. And here for the Dow Jones Industrial, we also see that it is holding this trend line here. There's a little bit of a short-term or intermediate-term trend line. Now it is putting in a lower high. So it is holding this low here so far right now. We'll be watching to see what it take out this low here in the coming week, the next week or so, and see what it move down and break this level here, which is prior support. So here we see that it's prior resistance turning into support here. So basically looking at that to see what this level hold. And this level is somewhere around 41,500, 41,600 area. And likewise for the New York Stock Exchange Composite, again, it seems to be holding the trend line. Also put in a lower high. We'll see would it be able to hold this low here in the coming week, or would it break below? And if that's the case, we're basically looking at somewhere around this area here down at the 18,000 level. And here for the NASDAQ 100, the NASDAQ 100 actually broke this trend line for a couple of days, and now on Friday it actually got back and reclaimed this. So we probably will need to shift this trend line down and use this pivot low and then see would it come down, make another hole of this trend line and push back up. Because right now it is putting in a series of lower high, and if it doesn't get above this high here and start reverse down and break this trend line, then we're basically looking for this level to get tested here, this pivot high here, and that would be somewhere around this 20,600, 20,700 area, and see what this level hold. And if it doesn't hold, then we're basically looking for the next area here, somewhere around this 20,000 area, to see would it be able to hold support there. And here's a chart of all the major market indexes. As you can see, all the indexes are below their respective 30-day moving average here. You see all the cloud is red. And looking at the sector, the 11th sector in the S&P 500, we notice that the energy is actually turned out to be the best performer starting the new year, followed by the utilities, and then the technology, communication, healthcare, industrial, consumer discretionary, financial, real estate. Then the consumer stable, and the material is actually negative. So here the chart of the 11th sector of the S&P 500. As you can see that basically they are kind of getting below the moving average right now, that 30-period moving average. So you can see that every one of them, the consumer stable, here's the real estate, and look at the healthcare, continue to show weakness here. not much of an improvement on the healthcare side. Likewise for the utilities. The financial is trying to come back up, trying to put a little bit of a higher low here on a closing basis. We'll see would it be able to get back up above this pivot high here to put in a higher low in the coming week. Looking at some of the key sectors such as the semiconductor, you can see the semiconductor is still kind of chopping around here, trying to find a sense of direction. Now, remember last week I was talking about the USO, the energy. We were talking about the latest, trying to make a move up, and as you can see, it came up to this 77.92, almost 78. And so right now, we probably could see this thing maybe come up to this 80 here. Just keep an eye on the energy. Seems like the energy is getting some strength in the upside on the upside here, and so is the processor, the energy. Refiner, the Explorer, that is also moving up as well, and it's getting above this 30-day moving average here. We'll see would it be able to come up to this 140 area here and take out this pivot high. And looking at the retail, we also see that the retailer here is trying to, maybe make a little bit move back up. But again, we are basically still looking at this downtrend here for the retailer, so I wouldn't be betting on too much on the retailer. Likewise for the biotech is still weak, and the miners continue to be weak, even though we saw gold bounce a little bit of this week, but the miner is still way down here, so it's not doing much yet. And looking at the banks, the bank is still kind of holding, holding here to see would it be able to come back up and possibly come up and test this 30-day moving average here. But I wouldn't be holding my breath. I think we're going to see the bank to break down, likewise here for the regional. And also the home builder, you see the home builder is kind of coming down. And that kind of tell you how the interest rate or the economy might be turning soft and discouraging a lot of the home builders to building more inventory that they could not move. And here's the TLT, the long-term bond. It is still moving downward, so expect the 10-year rate to continue to move higher. And I wouldn't be surprised that the dollar still continue to push higher as well. And that is not good for gold. So here's a table of the performance for these key sector here. You could pause the video and look to the table to see how they perform so far for the first couple of days of the year. Now let's take a look at the sentiment here. We're seeing the VIX is still underneath this 20 level and sitting at 16 area. So obviously the market participants are not fearful here. And also the put call ratio is still under this 0.75. And it is sitting at 0.65 area, so the market participant are on. And looking at the breadth, actually on Friday is quite nice. We see this advanced decline is quite strong. It's 1,456 more advancing stock than declining stock. So there was more market participation on this Friday's bounce here. So that is pretty good, and also the up-down volume ratio is 2-to-1 in favor of the up volume. Now, as far as the 52-week high versus 52-week low, the new low is still running ahead of the new high. But the positive thing is the number of stock making new low has come down quite a lot, and the number of stock making 52-week high is kind of holding steady in this area, between 40 and 50 area. So that's a positive. If we get more stock coming up to make new high, then we could see this new high, new low turn back to positive, and that would be a plus for the market. And looking at the cumulative AD line, between the for the New York Stock Exchange and the SP 500, see that we need to get up to this level here to take out the negative divergence. Although we are seeing a little bit of a positive coming up here, but this is still a little bit higher than this closing low here. So we have not resolved this negative divergence yet on the technical basis. So we need to see this cumulative AD line to continue to move higher. And looking at the Nasdaq market also have a broad market participation on Friday as well, almost 2,000 more advancing stock and declining stock. And the up-down volume ratio is 3.7 to 1 in favor of the up volume. So it's quite impressive for the Nasdaq market on Friday. And the other positive for the Nasdaq market is the new high, new low. The number of stock making new high actually outnumber the stock making new low. So that is another positive for the Nasdaq. Although the number of stock is still relatively low, but all in all, is the difference between the new high and new low that kind of give us this positive sign that the market might be regaining some of the strength. And far as the cumulative AD line, the Nasdaq market just basically is still unchanged. We're still looking for this massive, huge divergence to get resolved, and we most likely won't see this get resolved until this market cycle is flip over. In other words, we're going into some sort of a bear market or whatever to see this resolve. Otherwise, we basically just look at the short term and see does it move up and down and create these short term negative or positive divergence. So right now, we're basically looking at a short-term positive divergence here between the Nasdaq cumulative AD line and the Nasdaq 100. So far, the beginning of the year is not that bad, other than the first day of the year, first trading session of the year that kind of got spooked, some of the market participants. First 2-day trading session of the new year actually turned out to be a little bit positive. And also we are noticing some internals also getting a little bit more positive than the end of 2024. So who knows, maybe in the coming week, we might see a little bit more positive momentum to carry the market higher. But again, it is at a critical point, where we see that, it is in the process of easily could make a lower high, lower low. And so we have to be a little bit more cautious about that. And let's see what a full trading week in the new year will bring. So just be a little bit cautious coming week. Now looking at this volume profile for the ES, the E mini S&P 500, you see the prices back into this area here. Remember before we basically have a distribution here and a distribution here and a distribution here. Right now, it appears that the market is trying to build out this distribution to make this one huge balance area. So we probably could see price fluctuating within this area next week a little bit more before it make a directional move of either come up and break this this distribution area or come down and try to come into this area below this 5,800 area. And that is basically what we're going to be watching for in the coming week to see how the price fluctuate between this area here. In other words, somewhere around this 6,000 area. And here looking at the market profile for the ES, we see that there's not too much down here right now to finish off or to clean up, but definitely there are a lot of stuff up here that need to clean up. So I wouldn't be surprised that we're going to see the market try to work itself back up here and clean up some of these unfinished business, and then maybe chop around and come back down into that 5,800 level. So basically, try to make a little bit of a lower high, lower low to move on down. I'm not sure that we will see this market come up into the new high for the coming week. I do expect a potential new high before the end of February. Now let's take a look at the candlestick chart for the ES, the E mini S&P 500. Notice last week we saw the price pretty much hovering at this lower range of the weekly expected move. And on Thursday, it actually came down to the December lower range. And as I said on my trading plan post, that expect some shenanigan and wouldn't be surprised to see the price come back in to the weekly range for OpX on Friday. And that's basically exactly what it did. So it came back into the range after it has shaken out a lot of these premium seller down here at these lower level. And here we are looking at the upper range of the weekly expected move for the coming week. This is what the market is pricing in: 6,075 and 6,066.50. And for the lower range, it will be between 5,904 and 5,875. Now, also notice on the monthly range here for January, the upper range is 6,170 and 6,156.75. And the strange things to me is that it did not price it up for a new all-time high. It actually below an all-time high. So that's kind of interesting here that the market is not pricing in for a new all-time high in January. Now, for the lower range, it is pricing in 5,813.75, 5,725. And it is pricing in basically coming down to that 5,800 level. And I wouldn't be surprised that it will come down to this area here, somewhere around this 5,750. Now, for next week, the scenario that I'd be watching is for this thing to come up, possibly come up to this upper range of the weekly expected move, and then get a rejection and push it back down, and then come down here and into the January low here. Now, not necessarily all in the 1 week here, but what I'm looking at is a possibility of coming up here to put in a lower high, because right now we have a lower high, lower low. So it's just a continuing series of this lower high and lower low to push it down into this 5,800 area, into this January low range. So that's basically what I'm watching for the near term. So definitely next week we'll be watching something in this area here. Now, if you are interested in the daily trade level that I will be publishing on a daily basis, then go check out my newsletter at Substack. And the link is smtraderCA.substack.com. So I also placed a link in the description below. So go check it out after you finish watching this video and see all those additional content that I publish in my newsletter. And looking at the SPY, the ETF for the S&P 500, notice that similar price action as the ES. And we saw the price came down into the lower range of the weekly expected move, and also came down to the December lower range before it come back into the range and close out the Friday OpX inside the range here. So you can see that the price is still pretty much on a decline here, even though we got this nice pop on Friday. And here's what the market is pricing in for the coming week. The upper range is between 601 and 600.10, and the lower range is 583.80 and 581. And also the January, the market is pricing in the upper range 612 and 609.70. Now, the interesting thing here is that the market is pricing in a new all-time high for the SPY, while it did not price in for the ES. So that's kind of strange. Got to keep an eye on this, so kind of try to trick us to see which one we will watch. Well, we're going to watch both of them. And the lower range for the January is 574.20 and 567. So here again, what we're going to be watching for, basically looking for this lower high and then lower low to continue to push down into this 564 area here. Now, we could see some support, maybe initial support down here at this 571 area, but I expect this low will get taken out eventually and come down and test the this particular support area here that it used to be resistant and turn into potential support. So that's basically what we could be watching. Maybe a little pop, continuation pop up into this 601, 600 area, and then get rejected and pushes back down into this, completely fill out this gap area, and then take out this low down here near this 567, 570 area here. And now looking at the NQ, the E-mini NASDAQ 100 futures, you see that the price also came down to the lower range and then come back into the weekly range for the OpX last week. And here is what we're going to be looking at for the coming week. So you see what the market is pricing in is for the upper range to be between 21,925 and 21,882.50. And the lower range is 21,105.50 and 20,975. Notice that it is pricing in a lower level than the last week. So that is interesting. The market basically is expecting a lower price action for the NQ or the NASDAQ 100. So again, I wouldn't be surprised to see it come up and then get rejected and come back down to the low range and work itself down into this 20,375 area, basically this pivot level here. But eventually, I'm looking for the NQ to come down and dip below the 20,000 level, but that could be for another day. But for the coming week, we're basically looking for a continuation of forming this lower high and lower low. So that's what we are going to be focusing on all these indexes in the coming week. And here's the QQQ, the ETF for the NASDAQ 100. You see that it flirted with the lower range of the expected move last week, but it remained to be inside of the weekly range for most part of the week. Now, it didn't even came down to this December lower range. So it's slightly different price action for the QQQ compared to the SPY and the ES. So for the coming week, the market is pricing in the upper range between 529.30 and 528. And the lower range is 509.10 and 506. And for the January upper range is between 543 and 539.50. And it is pricing in a new all-time high, or possibly could be a new all-time high if it gets to the upper edge of the upper range. Then on the lower range for January is between 497.70 and 490. So what we're going to be watching for, once again, is a series of lower high, lower low, continue to push itself down, eventually get down to this 476.57 area. So we'll be watching the upper range for possible resistance and then push down to the lower range for a little bit of initial support and then get a rejection and come down to the lower range of the January expected move. So those are the scenario for the coming week. And we'll continue to look for a near-term downtrend, okay, to continue until it tells us otherwise. So if you like this video, be sure to smash the thumbs up to give it a like. And if you are new to this channel, click the subscribe to support the channel. And be sure to go check out my newsletter at Substack. And the link is in the description below. And it is smtraderCA.substack.com. Thank you for watching and a Happy New Year.